So, crypto's next big battle, the fight for stablecoin supremacy. This is what we're talking about today. Myself, Ash, we've got Gaz, and we've got Maurice as well on this one, who did sound the alarm pretty early on UST in our old Telegram group back in May 2022. Pretty scary times what's happened, so we are going to talk a lot about stable currencies. I did play a little bit of devil's advocate in this one. I wanted to see what would happen with the reactions, and I think I got one. I think it was interesting, so let me know what you think and enjoy the podcast. So guys, what percentage of stable currencies are you in terms of ratios and whatnot?
Ooh, I don't know the exact figure, but I think it's around the 40% mark.
40?
40, yeah.
Oh, what are you, Maurice?
I could say I'm about 55%.
Oh no,
I was close.
I'm literally 10%. All in.
No, you're all in, aren't you?
Well, it's all in profit technically, so it's what I had for a long time. Which actually, to be fair, we are talking about stable currencies. None of them, what I was in, went kaput, apart from one that we will talk about in a bit. But we do need to talk about the use of them. Is it useful? I'll start with you guys in terms of when we look through the cycles of bull bear. Every time we get FUD, every time you're sitting on a bag of profit thinking, I've made it, I'm all right. And then you get on Twitter, you get on YouTube, you hear FUD about Tether, you hear FUD about DAI, you hear FUD about obviously UST, what happened there. Does it worry you holding stable currencies in the space?
Yes and no. It's they're a very important part of the industry, in my opinion. You need that ability to bank profits, put it in, something stable. But then there is obviously that little bit of worry because, the whole narrative of crypto is get your money out of the system, out of the banking system, having your own keys to your own finance, etc. But then there is always that little bit of doubt of, is it as safe as money in the bank? And then obviously the past 12 months have been a real scary roller coaster. And the huge irony is that, so me and you have obviously been in since 2017 when USDT Tether has obviously been about for quite a while. That's been the most FUDed stablecoin for the entire time. And yet it's probably now the most trusted. It's the only one that didn't go, get blown up in like the minefield, which was the stablecoin year last year.
The thing that I always remember is when I first started in cryptocurrency properly in 2016, there wasn't really an appetite for stable currencies. If you look back, the market cap was so small. It was only on Bitfinex as well, which is obviously the parent company. And then we look back and we think, wow, that's pretty cool. And now we're looking at dominance of US dollars in terms of stables for how we do price action. And then we've got, oh God, how many stable coins? I want to say about at least 30 now in like all other networks. You got other ones on Polkadot. You got ones on Cardano now, different chains, one on Tron as well. But there's only about literally 4 you can really kind of put your money into because of liquidity. You need the liquidity. And then obviously you got to think, well, Tether has the greatest liquidity. You have USDC, which had good liquidity, but all of a sudden it's starting to fall off a cliff. And then obviously UST, which was great for certain things. We will talk about in more detail in a bit. But that obviously went kaput. And the way I look at it, it sometimes does scare you because you said it there, or you want to get your money out of the system. But sometimes you've got to think safety. Like, yeah, obviously anything can go wrong. But what I will always say is diversify. Put some money into one, put money into another. Don't have it all in one chain, for example, because if it's get exploited, which the Ethereum chain does get exploited quite a lot, the data backs it up. And it's kind of scary. I don't know about you, Maurice, but you obviously talk more about the warning signs of stables. You sounded the alarm a little bit. I think you scared the living shit out of people on the old Telegram group when you were like, this doesn't look good, boys and girls. So shall we talk about the fall of UST, which obviously could happen, let's be fair here, to most assets, but this is algorithmic stablecoins, which is the way it was run. It was a bit of a protocol element that was kind of soundboarded as a brilliant thing, but it failed massively. So feel free to share some insight on what you found that time.
Yeah, so I remember that day to like still to now. It was Friday. It was like 11 at night. Everyone was all out, and I was in Telegram. Oh, there's some UST for the year, and because we were all in Anchor Protocol.
Oh yes,
Yeah, I remember those days. 20% APY.
good times.
Crazy, yeah. But yeah, I mean the whole when you like look at it now, the UST Luna was like just a massive Ponzi. Like it just makes like no sense why it was so big. It just had like loads of backers. Like even the protocol, it's obviously algorithmic, so it's not actually like backed by anything. Like USDC, it's backed by US debt, US treasuries, things like that. And this is just the whole sort of trust me, bro.
Steady lads deploying capital.
Yeah.
Literally.
Yeah, and so like because the way the protocol is designed, if UST drops below $1, Lunar's minted, and so obviously there was like a massive cascade where it was just dumping like crazy, and people were obviously dumping Lunar as well, and so this just had like a massive snowball effect where so much Lunar was being like minted and created. Like to this day, I think there's like nearly 6 trillion Lunar tokens in circulation.
Probably, easily by far because of the way the maths works. But you got to remember, right? With the algorithmic stablecoins, it was all done on backtesting. No one ever foreseen the liquidity gap that they could be able to pull to allow it to mint so much to then make it obviously fail. And the protocol just doesn't work, and I don't think it will ever work in any climate.
Even like Anchor Protocol, it wasn't like they were saying it's very sustainable and all this, but the only reason it was able to give that yield was because of investors kept putting money into it.
Yeah,
and so
you don't know where the yield's coming from. You are the yield.
Yeah,
that's what I remember. So going back to Anchor Protocol, I remember when you're on the front screen of it, you had like this little thing that showed you how much was in reserve, and it was a downtrend completely. Like, this doesn't look right. I'm enjoying the money, but it doesn't look right. I didn't put all my money in, obviously, and like it was like, oh, they're just going to deploy capital. I was like, where the fuck's that coming from? And then I was like, this is a bit odd. So I took a little bit of money out, thinking that's all right, and then I moved it to Swissborg to make it even easier. And fuck me, like, I mean, I'm glad I got out before I think you sounded the alarm, because I thought this doesn't feel right. I was like, too much risk. And I think that night that you were talking about, I think that's what Pinky was talking about on the podcast in terms of he was on a night out with his missus.
On a note, yeah.
And he probably read Telegram, seeing you thinking, oh shit, nice ruins. We're now homeless. Oh dear. So yeah, definitely it's a big thing.
Yeah, I think the Lunar Foundation Guard and Terraform Labs, all these, they were just like piling hundreds of millions, billions of dollars into it just to keep that APY at where it was. And then Anchor themselves, Anchor themselves actually burned like $100 million of UST to keep that yield.
Yeah.
When it was beginning to sort of...
Once that changed, though, from keeping the yield, it was all about then keeping the peg. And then keeping the peg would indicate, oh, let's just put the burn-ins on and just fire it all up. And just all of a sudden you've got multiple amount of Lunar, and then that was it. Like, as Gaz says, the death spiral happened, and that I didn't think that would have went to zero as quickly as it did. Yeah, from like $104 to wow, it was literally the biggest rug pull ever. And there's a lot of people claiming they made lots of money on the short, but I imagine the liquidity to try and sell that position would probably have been diminished anyway. So it's mental when you think about it.
Yeah, it was. I got quite lucky because mine was on Swissborg as well. But the trouble with Swissborg is once you put it into a yield, you want to take it back out of the yield wallet or whatever it is, you've got to wait 24 hours. So I was just lucky that I initiated the 24-hour withdrawal period in time.
Yeah, because if you were trapped, you're snookered like.
Yeah, luckily I had it on Terra Station, or I could withdraw my UST through Terra Station, and that was like super quick. So I think within like 20-30 minutes, I was like all out into USDC onto the ledger.
You got to think now, though.
Pinky was sat in the corner of the room. I need to go.
Yeah. Don't buy any more beers. I need to go home. I'm going to shit myself because I've lost all my money.
Mo ruins everyone's night, and he's like, "Oh, it's all right. I'm okay."
People look forward to the weekends, but hopefully I'll save people some money.
It's funny when you think though, because like when we're looking at this and we're going right in the obvious terms of what happened after this, it was no yield could be trusted, no exchange could be trusted. Freaking now we've seen FTX go kaboom, we've had BlockFi, we've had Celsius, all these like platforms that have like, oh, yield. There's still Nexo. Like Nexo, I think is a bit of a Ponzi scheme to be fair. Now, when you think, how is that still paying 13% yield? That's a bit odd. But hey, that is what it is. But it's all started from that. It all started realistically from greed, and I think stable currencies is one of the biggest elements of greed because they can mint whatever the fuck they want. Well, kind of. We'll talk about Binance in a minute. But when you think like where the space has gone, it went from nothing in terms of no yield, no DeFi, no nothing, to mega mental yields and people getting passive income for life, which didn't really happen, into literally nothing overnight. And that was the worrying thing because I was don't get me wrong, I was enjoying the yield. It was great. It was like I've took profits in 2021 all the way through building up stable bags, and then all of a sudden it just went up. So guys, I have a question for you. Do you think Binance needs a stable currency? Obviously the BUSD under a little bit of pressure from the SEC. What do you think? So Editor Ash here. Sorry, Gaz's hamsters died. So sorry, it's a bit distorted here.
We've got lots of different stable currencies on different chains under different platforms, etc. The big worry is obviously when you're putting your trust in that is, what's it backed by? So it's that same debate over like centralization and decentralization. You'd want the stable currencies that you're putting your money into to be like 100% backed and guaranteed. But then to do that, then you're essentially just making a new banking system whereby you're still under the centralized system that you're trying to escape. So does it need it? I don't know whether the Binance itself needs it, but the industry certainly needs trusted stable coins. Whether Binance can offer that, I mean, so far so good. But yeah, it all depends on the regulatory side of things. Because they've been stopped, they've been told they can't mint anymore. Is that right?
Yeah, by the SEC, but it's because of Paxos. They're American, I believe. So it's a bit of a problem.
Yeah, and it's a bit weird that because Paxos is actually like regulated by the New York Department of Financial Services, and then they've just come out and said, "Oh, you're not allowed to issue it anymore." Like it's a bit weird.
It's weird because New York itself is often the place where people cannot get financial services because it's really hard regulation, and they're obviously regulated by them. So it's it's an interesting
USDT,
one.
That's not regulated there, isn't it? Yeah.
Yeah, there's a lot of things like if you live in New York, you're buggered, really.
I think there's a lot of politics going on, like a power struggle almost between, because obviously USDC is backed by BlackRock, I believe, is it?
Yeah, that's right. Yeah.
I'm not sure what USDT, who's involved with USDT or who backs it, but then obviously Binance is trying to be its own independent flagship for crypto and doing the BUSD side of things. So I think it's more just about that power struggle than anything, because again, it goes back to the whole centralization of things. We want a decentralized money system, but that guarantee comes from a centralized place. So that's what UST Lunar was meant to be about. With it being algorithmic, it was meant to be that decentralized stable currency, but as we've just seen, that didn't work out. And there's obviously that might not be a conspiracy theory as such, but that theory that it was targeted intentionally so that we had to stick with centralized issued stable currencies. So don't know. It's a big mess that I don't think I'm intelligent enough to understand it all. But all I do know is that for the crypto industry to continue, we definitely need some form of stable currency to be able to bank profits into. And then the other thing that we need to make sure we keep is that link between crypto and being able to put it into the centralized system of banking as well, because if that link is severed, then I think crypto is just almost over, or it's certainly back into the dark ages.
Yeah, I
Because people
agree.
aren't
I
going to want
mean,
to put their money into crypto, not being able to get back out again.
the way I look at it, if you can't take it out, what's the point? Like, it's a financial instrument. It's backed in terms of US dollar value. It's a huge thing, and obviously, I find it very, very easy to go from crypto into my bank. It's flawless. It's easy, but it does feel like a power struggle. And if we talk about power struggle, Maurice, obviously, you'll remember this when Binance went. Any stable currency that comes into Binance, it's going to get converted to BUSD. Did you think that was a bit of a shady move in terms of what they did there?
Yeah, it's a bit shady. Like, you can tell that they sort of want that the stablecoin space for themselves on their own platform.
Yeah.
So they obviously want BUSD to be the dominant stablecoin, and if you deposited anything other than BUSD or even USDT, then they would just convert that straight to BUSD.
It's mad.
So yeah, it's a bit shady.
Coinbase do a thing at the minute where you get free processing fees or money back if you convert into USDC, which is obviously theirs. So it's like it feels like we're in the mix of obviously a stable currency war. Like, I personally think that, well, I've got my own opinions, but USDT Tether is probably the most supreme in terms of liquidity, but it's got so much mud on the wall from the past. It's like it's always hard to shake, and there's always FUD, always. Whereas these newer ones, it's like there's not.
But that's the one thing you'd probably say now about USDT is that it has stood the test of time. Like, if USDC was ever going to blow up, you would think it was going to be over the last 12 months.
I would have went fucking not even that, probably in 2018. Like when it was small, and all the rumors were out. Oh, it's not backed by anything. It's only 70% backed or whatever. All the rumors were coming out. But we've got to talk obviously about the SEC, because they could cause some huge problems here. Like, I've said it before, I personally believe the bottom is in unless there's some fundamental thing that's going to totally unravel itself, right? And one of the unraveling things could be the SEC with a stablecoin. If that goes, this is not working or whatever, or this is not backed and we cease it. Yeah, or a security. Oh my God. Because we're talking about the three big ones here, right? We're talking literally about Tether, USDC, and DAI, essentially, right? In terms of the big three. BUSD, yes, we can talk about it, but ultimately it's big, but it's also, you can't mint it anymore. It's a bit of a, what's happening in there? But with DAI, because it's decentralized, it's going to be very interesting too. But do you think, I obviously going to Gaz here, do you think the SEC could just go and, well, not so much outlaw, but create huge lawsuit problems for them people to have, let's just say, trust issues with putting their money into, well, stablecoins, which could happen?
The SEC can do whatever the SEC wants to do. And that's the scary thing.
Yeah, I know.
They could literally just, we talked about this on the Learning Crypto live that we do on Fridays, where we say, isn't it funny how FUD or bad news always comes out of resistance?
Yeah, I was just...
I mean, that whole Binance thing came out when we were at about 25K-ish. So yeah, like all this, the bad news, bad events always seem to happen at resist, stuff like that. Like, literally the SEC could come out tomorrow and just be like, oh, all stable coins are either securities or they're banned or they're a terrorist threat. Like, the SEC just plays by its own rules, and we've basically just got to operate within those rules. But the thing that's always that attracted me to crypto, first of all, or one of the big things I was so bullish on it, was the fact that it isn't owned, like, or Bitcoin itself rather, as opposed to crypto. But Bitcoin itself has no, it has no origin. It's not owned by a country or a company, or it's not got a CEO, no structure to it. It is purely decentralized. And unless, of course, you bring up the mining issue, but then that's so spread out now that it'd be very, very difficult and massively expensive to actually get any sort of dominance in the mining market. So yeah, I mean, that's the whole, one of the main factors of Bitcoin is that it's not controlled or has any allegiance to anyone or anything. Unfortunately, stablecoins is just like an extension of fiat currency. And what we were saying earlier about it being like a power struggle, it's the same power struggle that we have between the dollar and the yen and the pound.
Yeah,
like
100%.
each country wants their currency to be the dominant one or used for certain things. Now that's what we're seeing now with the 3 USD stable coins.
It's kind of worrying, really, because when you talk about the SEC, as much as they don't have jurisdiction power, but they do have fear factor, and that creates that trust issue where, oh, hold on a minute, that's a bit of a, well, it's a problem, isn't it? Let's be fair. It's, look at the SEC case versus XRP. Like, there's still exchanges that will not list that. It's like, even though it's going through a pending case, it's like, well, it's crazy. But what do you think, Maurice, in terms of this? If the SEC obviously come out with something saying, well, this is a security or whatever, because I think today there's been a ruling about an NFT that could be, well, NFTs as a whole could be securities, which is quite scary. Well, not so much the SEC, but a judge. Do you think this would pump the living ghoulies out of freaking the crypto space? Let's be fair, because it could. Where's the money going to go?
I mean, yeah, they've got a lot of power. Whenever they say something, the markets do react. But with regards to like USDC, I was having a look at it before we came on here, and I think it's to do with how their reserves are managed. So obviously, their reserves are managed by BlackRock, and like the whole circle is managed by BlackRock. And it's to do with the fact that their reserves are in money market funds, and these classed as a security technically. And so the SEC is like, also, because your reserves are backed, using a security, we're going to assume that your token is also a security. So there's a bit of lag around that.
When you look at USDC supply as well, it is dropping quite a lot. A lot of people are not using it anymore, which makes sense, obviously, because there's a little bit of FUD there. But the same with BUSD, that's obviously dropped off as well. And Tether has obviously, boom, bang. And I think DAI has gone up as well. So a lot of people trust in DAI a bit more. But again, when we talk about, obviously, reserves and stuff like that, it brings me to the question I asked you, Maurice. Do you reckon that all the FUD with Tether was unnecessary in the past? Do you think it is genuinely backed and maybe the best one here now?
I mean, it's up to them to actually show the proof, because as far as we know, they're just saying, yeah, all our reserves or our USDT is backed by, treasuries or European bonds or whatever they're using. It's just they've got to like show proof. Otherwise, there's always going to be that FUD around it of, can we trust it, can we not? Then, it's always up in the air. But if Tether goes, then, I mean, there's not much hope for the rest of the space. Like, it's such a big part of it. And having like a stable coin that's as big and as dominant as they are, like they'll cause like a lot of red in the markets. I say that.
Oh yeah, 100%.
That's always been the doomsday theory, hasn't it? It's always been, when Tether blows up, we're going to go down to whatever. So the last cycle, it was like, back down to 3K. This cycle would be, if Tether blows up, we're down to 12K. Like, that's always in and around. That's always whispers of that. But as I say, it's not happened, and we've seen lots of other stable currencies blow up recently.
What do you think, though, guys, in terms of like Tether? Do you think if it, obviously, yeah, you've mentioned there, we could be into the dark ages, whatever, but do you just think that Bitcoin, Ethereum, etc., will just be the alternative, and there'll just be potentially a market where there is no stable currency, which could be probably far-fetched, but that could be the only solution. We could have a market where Bitcoin is king and it's all Satoshis again, which is what it used to be back in the day.
I was just about to say that, yeah. There never used to be alt stable currencies, like alt USDT stable currency. It was all alt versus BTC.
It's always Satoshis.
It would be, so it's that sort of scenario where you go, right, we don't want or need stable currencies anymore, or we can't have them. So maybe the SEC does come out and go, right, stable currencies banned, like can't use them, whatever. And, we go to an industry that is led by BTC and everything is just priced in Satoshis. That's sort of like the purest view, and like probably what it may do eventually. There's the ideal dream scenario where Bitcoin becomes the next global reserve currency and stuff. I mean, if that does happen, we're a long way away from it, if it ever does. But the trouble is, if that were to happen, the whole like BTC, runs the industry, and we just price everything in that, we would have a huge drop and we basically just have to start again, as I say, like from the dark ages, because normies, it's difficult enough to get normal people to understand the concept of crypto anyway and to put their money in. When you say like, oh yeah, there's no like stable currency, like everything's priced in this Bitcoin token thing, which just fluctuates itself, and you can't cash into a stable currency, I think people are just like, I ain't putting my money in that.
Yeah, you're right though.
So it would knock us back a long way. But you never know what could come out of that. Might be positive, but I think I would just much rather just have a world where we do have stable currencies.
Yeah, I feel like it's a necessary evil for like a market, because you look at the stock market, it's priced, using currencies, so like the pound, the dollar. So I feel like for people to like trust the market, they're going to want to use something that's backed by a government bond, or that's it's linked to some sort of centralized power.
I've got
the government.
I've got a little idea here, and it's kind of obvious. But on exchanges, you can put into sterling, you can go euros, you can go USD. In an alternative world, why can't we not do it like that? As in, you've got your exchange, and it's got one-to-one backing of what you put in there. That's your money, which could be right, as the stable currency, technically, into whatever currency you want. Yes, there's fluctuation in the FX market, but where's the problem there with that in terms of, right, how much Great British pound is in the market if they're like custodial? I know it's custodial, but it's not at risk. It's a crypto. It's a fiat currency. It could be like a broker. It could be like, right, your BTC is worth this much, sell into Great British pounds. Cool, you can hold it in that for a bit. That could be, well, I'm saying this as in it's not fucking happened, obviously, but that could be the only way I can see it as a solution, where it is similar to the stock market, but ultimately it's all valued in whatever how you want it to be valued in, which is quite obviously niche but normal. It's a weird one. It's an awful feeling to think, well, we might not have any stable currencies in the next 5 years, but it's a possibility. We've got to look at the probable facts here.
Yeah, I think if it's going to be, say, denominated directly in GBP and, say, the euro, then there's obviously going to be need to be a lot of regulation, which you're starting to see that in the euro, or in the EU rather. So in like a couple of months, there's going to be this bill. It's called MiCA.
I've seen that.
Yeah, so that's a new bill for crypto in Europe, in the EU, where everything is regulated as one. So what applies to one country will apply to another. So you're going to see regulation with stable coins, where so Circle, they announced the Euro coin last year. So I feel like that could be like a big stable coin in for the European customers. And there's like strict rules where there has to be like one-to-one backing with European debt. So your bonds and your cash, stuff like that. So the regulation can only be a good thing, in my opinion, if we're going to use like these centralized stable coins.
I agree. And then moving on from centralized or stable currencies, whatever, Gaz, do you reckon that maybe DAI is the best currency in terms of decentralization at the minute, in terms of the MakerDAO and stuff like that?
It certainly seems that way. There's also not, from what I can remember, I can't remember any FUD about DAI. Can you? Has there been?
No, it's definitely made up differently. I think it's a 3-to-1 ratio if you want to have collateral. So you got to put 3 times more down to get whatever you want, which is obviously overbacking it, which is good. But yeah, in terms of like stable currency, it probably is the best to hold your money. Maybe not the best for liquidity to get orders in, obviously, but if you're looking for somewhere to put onto your ledger, probably DAI is probably going to be the one with the most protocol kind of resistance as well. But in terms of FUD, it gets tiresome. It does. It's like, it's getting really, really annoying. But it is just one of those things, isn't it? It's like, you know, as a newbie coming in, it happens all the time, and this is why I say don't get footed out your bags, but you don't want to be footed out your stable bags. Christ, I mean, that's just the worst feeling ever, because going out of crypto is actually easy. Getting back into crypto is a lot harder. A lot of banks put a lot of restrictions on your account for like going into crypto again. It's like, oh, for God's sake. It's really irritating. But yeah, I think I have, funny enough, I have a question from the community about FUD. I'm going to read it out in a second, but actually, I'll do it now. It makes sense. So from Simon Flames, how do you think the current FUD around stablecoins might change the landscape of crypto in the future? Obviously, we've kind of covered that before, but might the way we take profit and hold on to deploy in future bear markets change? And I think yeah. I think if there is going to be a degree of regulation, I think we may not be able to. Well, we might be all right, but if you've got a lot of money, do you really want to risk just leaving it on your ledger and think, what if that stable currency is gone? What about if, you know, because it's not the fact that it loses a peg is my problem. It's a fact that, are we going to be limited in terms of going from ledger onto an exchange that you want to go onto? Will it then stop processing? Because they can just go, no, we can't. Because we've seen it before. We've seen it with like Binance and stuff. We're not accepting that today. Sorry, mate. What? You know, it's like, freaking hell. Like, then you're stuck with like literally a bag of nothing. And that kind of worries me. I don't know about you guys in terms of obviously the future elements, because I think there's a lot of people want to know about FUD. And I think it seems to get louder and louder every year, I think.
Yeah, I think it just needs like clarity around it. So like people don't really know what the case is for like the future for like stable coins. So I think as long as there's like regulation for how like they function in, you know, the crypto markets and how people can use and, you know, say buy stable coins using the bank, I think that can only be a good thing. But as far as like profit taking, I have like seen a lot of people go straight from like stablecoin to their local currency. So they won't like hold in crypto. They'll just go straight to fiat. I've seen that a lot recently.
Yeah, I've seen that.
That can also be a problem though. So that problem that you talked about before, Ash, about having lots of money and keep it, whether you keep it in stablecoins or not, it can work both ways in terms of, if you have got lots of money, do you really want to put it back into the banking system without the guarantee that you can actually put it back into crypto? Because it seems to be getting harder and harder to take money from a bank and put it into an exchange. So yeah, it's as we always say, it all comes down to your own personal risk and situation. But yeah, 100%. I think everyone would just want a stable currency that was backed, guaranteed. You could just flow in and out. But then to achieve that, you need it to be run by a centralized power. So I'll find a balance somewhere, I guess.
100%. We've got another question from Paul. Similar sort of question, but I'm going to take a part of it in terms of, is there a potential decrease of the kind of stables on the dominance indicator? So obviously what I use is dominance, and what we've found over the last 2 years is the increase in stable currencies. Obviously the BTC dominance has obviously dropped to a lot and it hasn't gone up much. But in terms of how I play the market, I think it's brilliant. I think it works very well. But we may well find that we're either going to go one way or the other. It's going to be a lot of stable currencies in terms of that dominance percentage-wise, or very little. But for me, I just think it'll be the same for now. I think even if we lose BUSD, for example, I think the money will just flood into either USDT or USDC or even DAI. So the indicator will be absolutely fine. But I don't know about you guys, but with the BTC dominance changing as it is, obviously over the last few years, we may well see stable currencies. Maybe in the bear cycle of the next bear cycle, we may well find if there's a big profit taking level and the stable currencies do survive, we may find that, I don't know, maybe 30-40% of the market might be stable currencies if people are trusting it, if there is regulation in space. Because we may find that with regulation, properly backed stuff, and it's all legit, the stable currency dominance may go through the roof. Because how many people do you reckon actually do trust stables? Because I think there'll be some purists out there that don't.
Yeah, well, it would be funny because if that does happen, as you say, because I was going to say we might not have any stable currencies in the next bear market. That might be the big FUD that drops us. Can you imagine wherever we peak to in the next cycle, and then the SEC comes out and goes, right, You've had your fun. No more stable coins. Boom, into the next bear cycle.
Imagine if it was, imagine if it was like, right, you've got like, I don't know, a 28-day notice, right? Move all your fucking shit. Can you imagine?
28 days. They wouldn't give you. They'd give you 28 hours at most.
Imagine the clog.
It'd be another Mo's Friday night on the Telegram.
Oh, yeah.
Like, boys, I've just seen this on the SEC website.
God, it'd be like a fucking champagne bottle, wouldn't it? It'd be just fucking the Ethereum blockchain will just explode.
Yeah, it'd be a chaotic day. But I can't remember what I was going to say now.
It's gone. Getting old, mate.
Oh no, that's what I was going to say. I was going to say if it was, if we did have like that huge increase in stablecoin dominance, what would be pretty cool is like you could, like it would be almost like another indicator of being able to track the market and where we're at in the cycle, because you could see that ebb and flow of the stablecoin dominance versus BTC and stuff like that. Because if it's all quote unquote on chain, you can actually see where that money's moving and going into.
100%.
There are some technical nerds out there that can track that.
There is some very good scam hunters that can find everything, which is like mental. But that's the beauty of the blockchain, isn't it? It's like, well, it kind of makes sense in that sense. But
that's why that's why I've always loved the argument ever since I got into crypto in 2017, where they go, it's used by criminals. Like, you really think they're going to use the most traceable currency in the world?
I know it's stupid when people do that, especially even in the stable currency one. You can see what people are spending, which is kind of like, we could talk about central bank digital currencies, but we'll leave that for a whole podcast on its own. I think
that's an entire
savage
podcast by itself. That is,
it's a whole other world.
Invite me onto that one.
I think you're supposed to be here.
I won't be tinfoil out.
Oh God, I think we both will. I do have a question from Monica though. Do you always leave the trade to BTC? So maybe this is obviously a question regarding obviously splitting profits. So is it a wise thing maybe moving forward, if there is a lot of FUD for the future bull market, to take profit into BTC or even Ethereum instead of just going full balls deep into obviously stables? Because you may find that as a problem. I'll leave that one for Maurice, because obviously the stablecoin kind of king here in terms of, get your shit out. It might make sense diversifying a little bit more if you can, especially with profit.
Yeah, I mean, the whole crypto space, it's because of Bitcoin, it's like it's the king for a reason. So I've been doing that a lot recently, where I've been taking profit into Bitcoin. Now I've been actually using Bitcoin to buy alts.
Yeah.
And trading using that pair. But I can only see good things happening for Bitcoin in the future. So I like taking profit or taking partial profits into Bitcoin. I don't think is a bad thing in the long term. Short term, obviously, we might dump down to 12k, but that's for the future.
I know what Gaz is going to say here. He's going to say the same sort of thing, but he's probably going to say it doesn't matter how much Bitcoin it is. It matters about how many units you've got. Probably.
One Bitcoin's one Bitcoin.
Yay, there it is. It's true though. Like, people laugh at that, but like the way I look at my portfolio, I look at how much it's worth in either BTC, Ethereum, whether it's dollars or not. There's times where it's going to be worth more in BTC. There's going to be times where it's going to be worth more in dollars. It depends on the dominance. And I think people, especially new people, they struggle to get their head around it. It's like, well, I'm going to invest in this thing called Bitcoin. I'm going to have one Bitcoin, but it's going to go up and down. Yeah, but it might well go up a lot more in the future. But I don't want to do that. I want to do this. All right, off you go to the rug pull section, and usually they get rug pulled, and they think, fucking hell. It's savage, like, but it is one of those things. I mean, yeah, for me, diversification is key. Even if you're holding stable currencies, don't be like, oh, I want to put like 100k in Tether and just leave it there. Split it up, like, because, what if your wallet breaks? What about if the protocol snaps? Or I don't know, it's just mental when you think about it. You've got to have, in my opinion, some kind of risk management, and even if that is in holdings, so you're going to be somewhat careful. And I know Gaz is kind of the king of the obvious in terms of risk management, but let's be fair here. That UST situation could have been a real mess if we didn't, sound the alarm early. I mean, imagine that. Imagine how many. I know a lot of people got hurt in anyways, but yeah, it's the devil, isn't it? Like, that could happen, and nothing, in my opinion, nothing's safe in crypto. Even, well, obviously Bitcoin, I think, is probably the safest by far because of obviously the chain and how it works. But it's not immune to price fails or like the SEC jumping on it or the stable currency truck running away from it or whatever, which could be quite scary. But I do have one more question. If Paco stops minting BUSD, could Binance find another coin to peg to? I'll give that to Gaz, because I think I'm personally struggling for an answer, so I need some thinking time.
Yeah. So what if they couldn't mint BUSD, basically make another stable coin?
Basically, because Paco's is the issuer of it. It's
Yeah.
basically a rebranding job, isn't it? So would they go to another service provider or another thing, entity, institution, whatever, to do it?
Yeah. Yeah, they're probably not going to like not being able to issue, because obviously CZ, Binance, it's doing all this stuff for a reason. We don't know what their end goal is, because I mean they have the lion's share of what do you call it, the market, and transactions and fees and all that sort of stuff. I mean, the amount of stuff they have there, the amount of pies they have their fingers in, like in terms of all the stuff you can do with BNB and BUSD and stuff. I'm not sure what their end goal is in terms of like how much more control they want, and because I think CZ's always been an advocate of the whole decentralized and decentralization of finance and stuff like that, but yet it's becoming more and more centralized with the amount of power and influence that Binance are taking. So yeah, I would assume they're not going to want to give up that stable coin issuance. So yeah, they may well look at finding an alternative.
What about you, Maurice?
Yeah, so I think it's going to be like a big hit to CZ's ego if he has to like sort of say we've got to obviously stop BUSD has been stopped issuing. Are we going to allow USD or USDC to come back onto our platform? Because that's obviously like people use that a lot, and so I think they're going to have to sort of bridge that gap. And even the BUSD that they were using on their platform, so on Binance Smart Chain, was like a derivative of the regulated version. So it's like a wrapped version. So it's not even a regulated stable coin. And I think that's like part of why the SEC went after them, because they started seeing that BUSD was being wrapped, then put onto different blockchains such as Binance Smart Chain, Avalanche, Polygon, things like this. And then because there was like a load of on-chain analysts, they were doing some analysis on the reserves that they held. So Binance would hold the ERC20 version of BUSD in their reserves. But when you would compare it to what they held on Binance Smart Chain in the derivative format, it was less. So there was like an imbalance. And I remember on my post on the platform, I put that we've got to like trust what Binance is saying, that they're saying that their BUSD is backed 1-to-1 with the ERC20 version. But now it's been shown that there's like a $1 billion discrepancy in how much they actually held.
Ooh.
So I think if they are going to issue or partner with another firm to issue a stablecoin, they've got to do it properly, because they started doing some funny stuff when they started wrapping the BUSD and then sending it all over the crypto all of the blockchains.
Yeah, you got to think Binance cartel's been mentioned a few times on Twitter in terms of why the market's pumped and a bit of shady business. But you've also got to think of the obvious. It's, in my opinion, Binance is a monopoly now. It's, as much as he is an advocate of decentralization, look at the size of it. It's not even that, it's the acquiring of other companies that are going down and trying to grow it. And you got to think, as Gaz says, what is the end goal? They've got so much Bitcoin, they've got so much Ethereum, they've got all this kind of, let's just say, trust in the space now. It's kind of scary when you think they can survive a bank run, they can survive the SEC kind of coming down on them a little bit. But will they let go of this stable currency? I don't know if they will. I mean, I can't think of anything that would kind of issue it as it was without obviously the issues that they've got in terms of there's a few little holes there. And, having something wrapped on multiple chains is not clever and it doesn't really work. It's got to be pure. It's got to be the actual asset. It's got to be one-to-one. If they sort that out and they do it right, they can be the kings of the stable currencies, because there's all kinds of shaded business around Circle in terms of how that was kind of built. And obviously Tether, Christ, we've not, like, we are literally trusting people, and it's hard to trust anyone in crypto. It really is. And regardless of what your best project is, they're still in charge of it regardless. And it kind of scares me a little bit when you think like, wow, a whole multi-billion-dollar industry of one stable currency could come crashing down tomorrow. It's like, oh, great, thanks. I'll sleep well tonight.
After this podcast, I'm just going to convert everything into Bitcoin, put it on 4 different ledgers, and that's it. I'm done. I'm now looking back at all this time that I've just been like quite comfortable in stables and been like, hang on, I'm not so calm anymore.
It's true though. Like, I always say it with Bitcoin and crypto. It's like, it's good until it lasts, and like, if that is the next thing that does go kaput, it's gonna be scary. But regulation, please? Question mark. I welcome it personally.
Yeah, I think what to say is that the US is anti-regulation, but it's like pro-innovation, and then the EU is pro-regulation but anti-innovation. And you're starting to see that shift, because it's obviously like the whole Web3 narrative as well. So obviously Web2 was primarily in the US. There was not many companies that were from Europe that had a slice of that pie. So you see with like the regulation in the EU, they want to be part of the crypto narrative, and that's like sort of their version of Web 2.0. They want Web 3.0 to be on their shores as opposed to in America.
But they, with the EU wanting to be quote unquote pro crypto, but they want some really, really strict regulation. Like they want people to have like their identity tied to wallet addresses and stuff like that. And then you look at the US.
That was taken out of the bill.
Was it taken off?
Yeah, that was like in the first draft. Then when obviously they put it to the people that they were talking with regards to how to format the bill, there was like, yeah, you can't do that. You got to take that out.
Oh, so they did listen then?
Yeah.
Okay.
So yeah, I believe that's, I think that is it, because I remember watching like a video of that a few months ago, but they said that they've removed that. And like a lot of people are saying that the bill is actually fairly reasonable for crypto.
Okay.
Yeah, so they've not been too harsh, but they've not also been like too lenient, where they've just like let anything go.
But then you got the US that want to, so they let they let FTX run, they let Celsius run 3AC, and now the SEC come and go, oh, this stake and rewards nonsense. No, you don't get access to that. You're like, what?
Yeah, it was that Kraken that they've came after. Yeah,
they're coming after people staking. It's just like, you just can't. Honestly, we've said it about a number of different topics within crypto, but I really feel sorry for people in the US.
Yeah,
because they seem to just get shafted all the time.
Yeah, crypto is like a threat to sort of the Web 2.0, and the majority of the companies that are Web 2.0 are based in America. So obviously, like you're seeing like Facebook, PayPal, even like Twitter, people are talking about there could be like blockchain versions of like Twitter. They're seeing that as a threat, so I can see why they're coming down on it. And then,
but if you're in that situation, you got to think, well, the world's never going to go backwards, so you're better off trying to innovate rather than just prevent, because you'll never be able to just keep things the same. So you're better off just evolving, unless maybe that's what they're doing. They're just trying to hold it off for a while whilst they catch up, and then once they're in a better position, they can then sort of open the doors, for lack of a better term.
Yeah, I think they're running the whole ship just like a dictatorship almost, where they're just like, no, not at all, staking, no, stablecoins, no, Binance, no, FTX, yes, you can have that, but everything else, nah.
That's
mad. Yeah, very dodgy.
So we hope you did enjoy the podcast. If you've not yet done so, please do check out our website, learningcrypto.co.uk. We do have an academy coming up in the next coming months as well, which we will be putting a lot of articles regarding stable currencies. And yeah, don't go a bit too heavy in stable currencies all at once, but please keep an eye on the news. You do not know what's going to happen in this evolving space. Anyways, enjoy. See you in the next one.